Hello and welcome back to Bitcoin Dorks, your daily source for cryptocurrency market updates and news. Today, we'll be discussing the recent comeback of Bitcoin whales and what it could mean for the market. In case you're not familiar with the term, Bitcoin whales are individuals or entities that hold a significant amount of Bitcoin. They can influence the market by buying or selling large amounts of Bitcoin at once, which recently, there has been a noticeable increase in the number of Bitcoin whales, particularly those holding between 1,000 and 10,000 Bitcoin. According to data from Glassnode, there are now over 2,200 Bitcoin addresses holding between 1,000 and 10,000 Bitcoin, which, well, some analysts believe that the influx of whales could be a sign of increased institutional adoption of Bitcoin. As we've discussed in previous videos, institutional investors have been showing more interest in Bitcoin as a hedge against inflation and a potential store of value. The increase in the number of whales could also indicate that more wealthy individuals are becoming interested in Bitcoin. As the price of Bitcoin continues to rise, it becomes more attractive to those who can afford to invest money. On the other hand, some analysts are concerned that the increase in whales could lead to increased volatility in the market. If a large whale decides to sell their Bitcoin all at once, it could cause the price to drop significantly. However, it's important to remember that Bitcoin whales have always been a part of the market. They've been around since the early days of Bitcoin and have played a significant role in its price history. In fact, instances in the past where whales have caused significant price movements. For example, in 2017, a single whale was responsible for selling off $300 million worth of Bitcoin, which caused the price to drop by 20%. So, what can we learn from this recent influx of whales? Well, for one, it's a reminder that Bitcoin is still a relatively small market compared to traditional assets like stocks and bonds. This means that the actions of a few large investors can still have a significant impact on the price. It's also a reminder that the market is still highly unpredictable and volatile. While Bitcoin has been on a bullish trend for the past few months, there's no guarantee that this will continue. Investors should always be prepared for the possibility of a sudden price drop or market correction. That being said, the increase in Bitcoin whales could be a positive sign for the future of the market. As more institutional and wealthy investors become interested in Bitcoin, it could lead to increased adoption and stability in the market. As we mentioned earlier, Bitcoin whales are individuals or entities that hold a significant amount of Bitcoin. These individuals have the potential to influence the market in significant ways, and their actions are often closely watched by market analysts and traders. One of the primary ways in which Bitcoin whales can impact the market is through large-scale buying or selling of Bitcoin. If a whale decides to buy a large amount of Bitcoin, it can cause the price to rise as demand increases. Conversely, if a whale decides to sell a large amount of Bitcoin, it can cause the price to drop as supply increases. This dynamic can create a level of volatility in the market that can be both exciting and nerve-wracking for investors. On one hand, sudden price spikes can lead to significant gains for those who hold Bitcoin. On the other hand, sudden price drops can cause panic and uncertainty among investors. Despite these potential downsides, Bitcoin whales have played a significant role in the growth and development of the cryptocurrency market. In the early days of Bitcoin, whales were instrumental in establishing a market for the cryptocurrency and helping to determine its value. As the market has matured, however, the role of whales has become more complicated. Some analysts argue that the large-scale buying and selling by whales can create an artificial price floor or ceiling that distorts the true market value of Bitcoin. Others suggest that the actions of whales can create short-term volatility that ultimately leads to wealthy individuals become interested in Bitcoin. It's likely that the number of whales will continue to grow. For investors, this means that it's important to keep a close eye on the actions of whales and to be prepared for sudden price swings. While the market can be unpredictable, having a solid understanding of the role that whales play can help investors make more informed decisions and navigate the often turbulent waters of the cryptocurrency market. In conclusion, Bitcoin whales are a fascinating and sometimes controversial aspect of the cryptocurrency market. While their impact on the market can be significant, it will be interesting to see how the role of whales develops and what impact they will have on the future of cryptocurrency. So, that's it for today's update on Bitcoin whales. We'll continue to keep an eye on this developing trend and keep you updated on any further developments. As always, thank you for watching Bitcoin Dorks, and